Thank you for joining me. I'm Alex. I would like to talk to you about 5 stages to getting rich by investing. And I would have liked to call it getting wealthy, but my space was kind of limited up there, So anyway, step 1 is personal finance. You need to make sure that your spending is in check and your income is enough to sustain you. That means that you need to go through your finances, you need to go through your spending and make sure that you actually have money left on your payday. So you actually have money to invest when it gets there. And the important thing is that you could always find ways to spend all the money that you're making. And you obviously shouldn't, because if you keep spending all the money you make, you will never get anywhere. You could make $1 million every year. If you spend $1 million every year, it's not getting you anywhere. So make sure you have the personal finance under control. Check your spending. Make sure you don't spend money on unnecessary stuff. Don't let lifestyle creep influence how much money you spend. Don't try to keep up with the neighbors and buy a new car every year and things like that. Number 2 is retirement. So you need to make sure that your retirement accounts are where they need to be, which means if you have a 401k with a match from your employer, make sure you get the 401k match. You should probably have a Roth IRA, especially if you're young. If you're over, let's say, age 35, 40-ish, worry about maximizing the 401k rather than the Roth IRA, because it's going to be much more profitable in the long term. Money invested in a Roth IRA is post-tax now and post-tax later, which means you have much less money to invest in a Roth IRA because you already paid the income tax on that. So make sure your retirement accounts are where they need to be. Make sure you have the retirement accounts that you want to have. Make sure you're investing the money, preferably automatically, in the retirement accounts when you need that. Then step 3 is personal finance again, because you're already done the spending checks that you need. You've gone through your spending. Now is the time to maybe refinance stuff. Like if you have a car loan that's a fairly high interest rate or something like that, try to refinance to get a lower interest rate, maybe a lower payment. If it's really high, maybe work on paying that off first. Make sure you're paying off all your debt, especially the high interest debt. Anything lower than like 5% interest, I would not worry about it, because you're going to make more money investing the money rather than paying off the debt. But obviously any interest that you can save by refinancing and things like that is going to help you invest more money. Then index funds. So at this point, you have money that you could be investing, and you're investing the money. And obviously in your retirement accounts, you should probably be investing in index funds anyway. So you kind of know what the index funds are about. You kind of know what the return is from the index funds. So right now is the time to have your brokerage accounts and buy index funds, and make sure that you have a brokerage account where you can invest in index funds without a fee. Vanguard, Fidelity, I'm sure many more allow you to just buy shares in whatever index funds they offer for free. So make sure you do that. Do that with all the money that you have to invest right now. And do that while doing your research on the next step, which is the actual stock investing. To be successful in investing stocks and to beat the market in investing stocks, you're going to have to do a lot of research. And the S&P 500 index fund is going to provide about a 9% interest every year On average, obviously, it might go down this year, it might go down next year, but on average, it's going to go about a 9% return. So if you have $100,000 in an S&P 500 index fund, you're going to have about $109,000 in a year. If you don't do your research, it's going to be very hard to beat that. So if you're just buying random stocks here and there because you think they're good investments without like reading the balance sheets, reading the income statements, joining the investor calls and all that, you're probably better off just sticking your money into an index fund, leaving it there, and just watching the money grow over time, and throw all the money that you can invest every month, every 2 weeks, every year into the index funds and just watch it grow. If you do your research, you should be able to beat the S&P 500 index fund by a significant margin. Now, that's probably not going to be 50% per year. It's probably not going to be 30% per year. If you're really good at picking stocks, you might be getting 20% per year, which is incredible. You're basically doubling your money every 4-ish years. So if you have $100,000 this year, in 4 years, you're going to have $200,000. In 8 years, you're going to have $400,000. But again, it takes a lot of work, a lot of dedication, a lot of reading income statements, reading balance sheets, reading 10Ks, 10Qs, listening to investor calls, watching the stock market news, finding out literally everything you can about whichever companies you're investing in. But obviously, it's worth it. So, make sure to subscribe if you like this video. I'm making more videos like this every day before market open. I hope you have a successful day.